Hi everybody, good evening. Thanks for joining me tonight. I'm looking forward to diving in a bit. We're going to pull up your tax returns from last year. We're going to go through all the line items in detail. No, I wouldn't bore you with that on a Tuesday evening. But we're going to talk a bit about helping you make more money in your business. Who wants to make more money in their business? All right, then you come to the right presentation. Let's do this. So what are you going to expect today? First of all, we're going to give you some real-world examples of situations. Obviously, we're going to remove client names in there, but we're going to give you a sense on what we see in the real world when it comes to cash flow. And then practical framework. So for me, I really like to provide practical examples, things that you can take away and implement it in your business tomorrow morning when you get into the office, whether that's virtual or an actual physical office. And then, of course, a few dad jokes. I'm known for those, and hopefully that'll keep you engaged and awake while you had, depending on how many pieces of pizza you just had. So, a bit about me, just to give you some background. Why am I qualified to come up here and talk to you about this stuff? I've got 20 years experience in finance and accounting. I've worked for some of the largest real estate and investment firms in Canada and the US, both on the real estate investment side and a lot of high growth businesses. So I've seen startups all the way through to multi-billion-dollar companies trying to add another billion, to give you an idea. Education-wise, I'm a chartered professional accountant, CPA. I have an executive MBA, and then I did, because I really love numbers, I did math at Waterloo and accounting. So I do a few numbers, but I do like to talk to real people, as hopefully you can see by now. And then my firm. My firm's called Finalyze. Our booth's over there. You can meet Dave and Asia from my team, and some of our team members here, and we'll share a bit about what we do. I really want to make this presentation more about you and your businesses, but of course, we'll share a bit on what we do as a firm. So let's talk a bit about cash flow, and we're going to make this pretty interactive. So I'm hoping you're going to be talking almost as much as me or close to that, so that we can keep people awake and engaged. Anybody want to shout out what cash flow is? Does anybody know what that is? Just say it.
Money coming in.
No. Yep. Money coming in. Yep.
Access to cash.
Perfect. So what it really is. So whoever said that money coming. Who said that, by the way? Who said money coming in? Okay. Repeat that. Oh, it was Tammy. Okay, got it. Okay. Money in minus money out is your cash flow. It's just that simple, right? So we're gonna start there. Again, I had to make sure my searches used real Canadian dollars and not American dollars, given the crowd here. But you get $100 in from customers, you spend $50 on your business, and you're left with a bunch of money, hopefully, at the end of all that. So let's talk a bit about how that works. So money in. I'll give you some examples of how you get money into your business.
Sales.
Yep, sales. Collecting sales, more important. We can make sales, but then our customers have to pay us, of course. How else can you get money into your business? Besides selling?
Services.
Borrow money?
Borrow money, that's right. And you can also put your own money in. So early days when you start up your business, guess what you're doing? You're putting in your own money, hoping to get revenue on the other side. And so some of the examples, somebody said sales, right? You get tax refunds. For those people who spend money on your business, you can potentially claim HST back. So that's a tax refund hopefully coming back to you. Government grants or credits, depending on the kind of business you're in. There's different incentives. The budget was just released last fall. Depending on the kind of business you're in, you might be able to qualify for some of those credits. So I highly encourage you to take some of that money. You're paying enough tax. Get some of that back in your business, right? And then funds from somebody said earlier, debt, right? You can take loans. You can take lines of credit. This all puts money into your business to help you keep moving forward. And then, of course, you could go on Dragon's Den or Shark Tank and get some investor money, or friends and family, or just however you get your money into your business. That happens. And then finally, from your own side, you may pull, going into setting up your business, you may have put some cash set aside in your TFSA. I did when I started my business, for example. I put some money aside because you need a little bit of money to keep you going until you make that first sale. And so that's the money in. So let's talk about money out. How do you spend money in your business? I'm sure you guys spend a lot of money in your business. Give me some examples of money out in your business.
Bills. Bills.
Yep.
Marketing.
Marketing, yeah. Marketing's there's a few marketing people here that will find ways to spend your money.
Employees.
Employees, yeah. Employees, contractors, all sorts of stuff. Good to see you.
Software.
Taxes are a big one. Yeah.
Insurance?
Yeah, you guys are, insurance is awesome. I think you guys have named everything pretty much that I had there. Software, rent, utilities if you have an office, or even if you're renting, early days I was renting, a virtual office and things like that. That's a few bucks out of your pocket every month. Depending on the type of business you might be in, equipment, materials, you gotta make those loan payments. And then of course, if you have an investor coming in, they're gonna want you to pay them a little bit of a dividend or a distribution depending on how you're structured. And don't forget, pay yourself, right? And pay yourself, it could be salary, it could be dividends, there's different ways you can do that, but sometimes that last piece people forget about. You do all this great work selling, spending all this money in your business, is there any money left over for yourself? And that's really the money outside of things. So there's a saying out there, you may or may not have heard this, but I think this is a fun one just to kind of level set how I think about business. And as you can see so far and what we'll be doing here, I'm not going to get into the accounting side of cash flow in the business. I'll spare you that. If you're an accounting purist, this is not for you. This is meant to be practical, cash focused, thinking about your business, not about debits and credits, tax returns, all that stuff. So as the saying goes, revenue or sales is vanity. It's really about, I sold this much, I've done so well. Like, it's that classic bravado, the guy or gal driving the Lamborghini, that side of it. That's the vanity side of things. Then profit. Okay, you made all those sales, but if your costs are more than what you sold, let's say you sold something for $100, but you had to pay $120 to people and utilities and whatnot to generate that sale, well, you're actually out 20 bucks in that case. So don't get, obviously sales are important, but then how does the profit happen? And then most importantly, which is the kind of theme of today, cash. Cash is king. You probably heard that one before in business speak. And so those are three things you need to be thinking about in your business, right? Sales are important. You gotta get money in the door at the end of the day. You gotta get customers, money in the door. We'll talk a bit about that. But then of course, thinking about, are you making money on those sales? Because there's smart money and there's money that isn't smart money, right? So if your costs are more than your actual sale, you need to be thinking about, managing your costs better. Is it the right kind of sale? Do you want to be in that business? Different things you got to think about as you look at your business overall. At the end of the day, the cash at the end of the month or the end of the year is what's really key and what's going to allow you to pay yourself and pay your bills. Okay, so this example, I don't want you to be this person, but what you want to give a sense on what the cash flow crunch might be. What do I mean by that? That's the name of the presentation today. So what do I mean by your cash flow is crunched? Anybody want to give some thoughts around that?
Is that more going out than is that coming in?
That's exactly right. Yep, that's one. Any other ideas on that?
Outstanding tax.
Yep. That good old tax bill. If you're an annual HST filer, you have this monster HST bill to pay in March usually. If you're a December year end, 13% of all your sales in the prior year all of a sudden all come due, which some people don't put money aside for, and then all of a sudden, surprise, CRA needs their funds. So money out is more than money in. That is not the direction you want to be in your business. Secondly, you're feeling the stress. Like business owners, it's not easy, right? Trying to manage your bills, your taxes. You're feeling that stress. The money's tight. You may have to borrow from the bank. Maybe you've got to pull in personal lines of credit, loans, just to keep things floating and moving along, right? You may struggle to pay yourself, or even if you can pay yourself. Some people at the beginning days, might be a year, might be 6 months, it might be 2 years before you can actually just pay yourself, just because the business is not generating enough income or profit after expenses. And then really, we'll talk about this a little bit later, a big part of business and why a lot of people here networking is to generate orders and business and sales. And so you're wondering, when is that next sale going to come for you? And you may not have a good, what we call a pipeline, which we're going to talk a bit about today. And then, of course, at this point, investors and banks are like, where's my money? And so this is the cash flow crunch that we see business owners deal with. When we're in business, we see all sorts of challenges, right? With not to get too political, but with some of the tariffs and some of the changes has caused a ton of uncertainty for you and your customers, right? So a lot of our clients, for example, are in real estate. And so they have real challenges with mortgages coming due, architects not able to do the work because they don't have any money to pay bills, like a lot of challenges that we're seeing in that particular industry as an example. And so kind of that cash flow crunch we see across a number of businesses, and then, not to single anybody out, but I'm sure we all feel that, especially depending on the type of business you're in. If you're in a seasonal business, certain times of the year, You're gonna be flooding with cash. You're gonna make it rain in other parts of the year. It's really tight, right? Like again, the kind of work that I do in accounting, obviously the tax season, we're pretty flush with cash, money coming in. We're doing people's work, and then the summer months can be a little bit dry. But I still gotta take vacations, so I gotta make sure I've got money set aside, and even for my own business when I think about it that way. So let's run through a couple of simple examples. Again, we want to make today practical, real-life scenarios, things that may help you think about what the problem is that I'm trying to kind of outline here. So example number one, your customers are not paying on time. So when somebody said sales earlier, if you noticed, I clarified to say customer collections, because you can sell today, but then maybe they have 30 days to pay you, 45 days to pay you, and some people, you call them, oh yeah, it's with accounting, oh yeah, the check's in the mail, and I've been there. I had a client not pay me for 6 months, right? And I'm chasing them, it was quite a bit, about $10,000, so it's not a small amount of money. And we're chasing them down, and they had significant net worth, this particular customer of mine. And obviously, it's very challenging for me because I've done almost $10,000 worth of work and I don't have any money in my pocket from doing this. So that happens, and then what happens, of course, is that you still gotta pay bills. If your customers are not paying, where does that money come from? It's gonna come from your lines of credit. It's going to come from investments. Maybe you have to pull different things like that. So, if you run into those situations, I personally said, I've had that happen to me as well. There's a couple of practical tips to think about. So number one, obviously just being on your receivables or your customer collection. So who owes you? How long has it been? Have you touched base with them? Just making that part of your normal process, right? Because if you send a bill and hope that it comes in, they may not send it, right? They may forget the due date, or they're too busy, or you haven't asked for the money, they can't be bothered to pay you. And so that can be a real challenge for you. And then, of course, if you've got new customers, do a bit of a background check on them. Check out their Google reviews, right? Is this somebody I want to do business with? Have they had issues? So, back in the day, we would run all sorts of background and credit checks and things like that. But now the internet's your friend, right? Google somebody that you're going to do business with to see. What are the reviews on this person? What do they like? What can I glean from them? Who are their LinkedIn connections? Just don't get too weird on it, but you can definitely do your own research to see if this is somebody you want to do business with and you want to give your business to, right? And then, of course, that particular example I gave you, after that, the next order, I asked for 100% cash up front, and he actually paid it for the next order. After being out 10 grand for 6 months, I said, no, next deal you want, we'll give you the service, but I need 100% cash up front. Otherwise, you'll have to go somewhere else. Because you've got to stand up for yourself as a business owner. Sometimes people, unfortunately, not everybody, some people may take advantage of those scenarios. So important is that this is one way that the cash flow crunch happens. A second example, I talked about it earlier actually, which is HST, right? So every month you're charging HST to your customers if it's required if you're selling over $30,000 in billings in a year. And so you'll get that money every month and you'll think I've got 13% of my sales free in my pocket. Well, that's not really true, because at the end of the day you've got to pay the government for that. In this example, we've seen it in a number of situations. The owner hasn't put any money aside for the HST. All of a sudden there's a monster tax bill at the end of the year, 3 months after year end, and they're now scrambling to make that payment. So really the way to kind of get around that, of course, the obvious one would be put the money aside, right? Literally set the money aside for yourself so you don't spend it. But if you're somebody that doesn't have that kind of financial discipline, which it can be people, the one we recommend we do with some of our clients is we actually voluntarily file monthly or quarterly on their behalf. So even though they're an annual filer, they'll file monthly or quarterly just to get the money out, so that it's in the government's hands and not in theirs, and that they don't have to deal with this crunch. Now, I don't believe in that, because I think you need to keep money in your pocket and put that money to work. But at the end of the day, you've got to do something that makes sense for you and your business. So that's kind of the cash flow crunch idea. So with that in mind, the key idea here was talking about 2026 and how can you plan for your business financially. We're already a month into the year, so you got 11 months to go. How do you think about your business, and how should you be thinking about your business from a financial perspective? Because of course, you had amended last year to a certain level of revenue, profits, amount of money. You in your mind have a place you want to take your business. Maybe you want to double this year. Maybe you want to add more customers. Maybe you want to add more employees. You've got goals and dreams and things that you want to do with your business. So let's talk about how you can apply a financial plan to those goals so that those goals can become a financial reality. Because you can dream all the things you want, but if the finances don't line up, you're not going to achieve those dreams, at least sustainably, right? So we made up a framework. You'll never find this online. It's only proprietary to us. I'm just kidding, but no, we did make it up, and it's called PCF. The first thing is about pipeline. So we'll talk a bit about your sales pipeline and how that works. Costs. We talked about costs earlier. The kind of costs you need to be thinking about in your business. And then finally, funding. Making sure you've got the funding in your business to keep things afloat. So I'll talk through each of these three components, and don't worry, we'll make sure we're interactive with this stuff so you're able to share your thoughts as well. So let's talk about pipeline. So AI is pretty cool. I gave, just a side note, I was punching in PowerPoint, and I said, I want you to create me a sales pipeline that I can visually show to a presentation today. And this came out of Copilot and Microsoft PowerPoint. Not that I'm endorsing them, but it's pretty cool that I can do that, and an accountant like me can figure it out in 30 seconds. And it gives you something that I think is a pretty good visual, because let's take an event like this. You'll go and meet a whole bunch of people, and that's the far left box there. You'll meet a bunch of different people and network with them, connect with them a little bit, whether it's online or in person. And then some of them will be what we call qualified. So people that would line up to be a potential customer for you. Now, there's good people here that you can potentially network with. Not everybody in here is necessarily going to be a customer for your services. So you're going to apply some filter, for lack of a better term, to see which ones might be qualified to be potential clients for you. And then you're going to negotiate with those people. You're going to have a call with them, you're going to tell them all the great things you do, and understand that there's a fit there, and that's going to take a whole bunch of time, of course. And then they're going to have to make a decision. Do they want to switch to their provider to you? Do they want to stop doing it themselves? Are they ready to do all that? That whole process, on average, takes 60 to 90 days, depending on the business you're in, right? And even longer. And so, if you're thinking about your sales today or your sales tomorrow start actually today. Because you've got to think about, end of January. If I still do any sales work today, I'm hoping I might close those people in April, right? Or earlier. And so you're constantly trying to fill this pipeline or this funnel. And you got to be constantly doing that in order to achieve those sales targets. Because you're not going to, in fact, if you close 100% of your sales, it's actually not a good thing. It may sound like an odd statement. You're usually taking anybody who comes in the door, which at the early days makes sense. Having said that, you could also be leaving profit on the table. If you sign every customer, whether they're want to buy at a low price or a high price, you're putting yourself in a very difficult position to deliver in your business. So managing your pipeline is really critical, and that's the first one. So what are some tips that you can think about when you manage your pipeline? So first of all, whether you use a system or not, you can use one of these, they're called CRMs, customer relationship management systems. There's a few out there that people use. But at the end of the day, track those leads. Like, leads are gold, right? So people that you meet here today, make sure you get their contact information, track them in the system, even if it's an Excel spreadsheet. Just make sure that stuff's being tracked. And then follow up. The number of deals I've closed just by being a little pesky and being like, hey, have you thought about your accounting services? Or you want to just follow up on our last conversation? I've had sales come 2 years later from people that were just stay close to what we do and then have decided to come work with us later. So that little bit of follow-up is really important, that allows you to close the sale. Does anybody, by the way, just curious, does anybody use a kind of a sales tracking tool, a CRM? What do you use?
Go high level.
Go high level, okay. And how often do you go into your system to track leads and not to hold you?
Every minute.
Okay. Every minute. What kind of business are you in?
I'm a franchise consultant / broker.
Okay, excellent. So you're in there every minute, like you live and die with.
Yeah.
Okay.
Unless I'm in a meeting, but you got to be in there all the time.
Yeah, absolutely. And have you found follow-ups help you close deals? Like what's been the big key of using that system?
The automation part.
Okay.
Because a lot of stuff is done, as soon as a lead comes in, they get an email and a text. Mm-hmm. Okay? And then it automatically follows it up. And then it reminds, if somebody makes a meeting, it reminds them, oh, you got a meeting today. Please confirm, right? Yeah. But the nice thing is it's all in one platform, right? Mm-hmm. Because when you do it on your, let's say on your laptop, on just Excel or whatever, you lose track of what you sent to, right? This is all in one spot. Yep. So that's the nice thing about it.
And all the history is there. I use HubSpot on my own end. Again, they're all, big potato, big here.
But I can tell you though that HubSpot, those are all great, but Go High Level is very inexpensive, and right now it's everybody's getting enough. For what it costs,
Okay.
compared to HubSpot, you should look into Go High Level.
Okay, I'm gonna talk about
I don't have shares in the company.
It sounds like he does. I don't know, guys. Anyway, I'm just
I
saying.
wish.
I use it.
But,
Yeah, use it to
you guys, we happen to be sitting next to each other. I feel like there's something there. Anyway.
just
but,
better.
Yeah, just sure. Anyway. But yeah, different systems, different ways. Just being on top of that, right? Getting those leads in the door. Sometimes when you feel that kind of, back to that picture of that guy earlier, the cash flow crunch person, that's the person without leads, right? They don't know what's coming in the door. You've got to be able to work ahead. You may have sales today, but how do you make sure you constantly have sales coming in? Because if you sit your heads down, focus on today's sales and close and deliver on those, then you wake up on Monday with no work to do, no money coming in. That's a very stressful situation. So you got to constantly be kind of on top of that. And then really, again, thinking about where your sales going to come from in 2026. We talk about smart money, certain kinds of sales. Which sales last year made you more money versus other kinds of things, depending on the kind of business you're in. You know, certain types of services, for example, that we do, we make more money on than versus others. It's not even just money. As an entrepreneur, I also think about scale. So I can make a whole bunch of money on a service, but it requires all of my time, like a full day of my time. That's time away from the business. But if I can find a way to sell a service that somebody else in the team can do, and I just take the margin off the top, that's scale. I can sell 100 of those widgets, right? And make more money that way. So different ways to think about your business. And then type of customers, right? So certain customers, which ones are, they call it the client, ideal client profile, ICP, client avatar, pick your marketing terminology, but thinking through who's the kind of person I want to attract, where do they go, look them up on LinkedIn or Instagram or whatever your jam is, and really just make sure you understand where those people go, frequent those places, and those customers that are in your profile. Hey, do you know anybody like you who also can use our service? We'd love to. Drop us a Google review. Like those are ways that you can generate leads from your existing base, right? And then obviously we talked about this earlier, but services that are the most profitable, and then marketing, right? So there's different ways now with there's in-person events like this. There's there's digital marketing, there's social media, there's different ways, paid ads, there's different ways. So evaluating those strategies and then tracking, the classic one, when somebody books a call with me, I ask the question, how did you find us, right? And sometimes they'll be like, well, I was on ChatGPT, or I was on LinkedIn, and that's how you track. Oh, okay, my LinkedIn seems to be working, people are finding me, let me see if more of that. And don't worry about the vanity likes, worry about, impressions. Are eyeballs getting onto your content or not is really important. So that's the pipeline side of it. So when you think about our framework, really trying to manage and look at that pipeline and really analyzing your sales in that next level of detail really then allows you to say, okay, this is the money that's going to come into my business. Then the next thing is costs. Now I think of costs in two different ways. I think about expenses, it's just stuff you got to do to maintain the business, right? And we'll talk about some examples there. And then there's actual money you're spending to invest in your business. And I don't just mean equipment. I mean like you could be adding a person. Like maybe you're a one-person company today. You now need to spend a bunch of money to add a manager to your team or an analyst, or depending on the type of business you're in. That's an important investment in your business to be able to move forward. And that's not that is a cost. It's money out the door, but that's going to hopefully generate sales on the other side of it, or free you up to do sales, for example. So when you think about practical tips, the first question you should be asking yourself is, if I want to hit those sales numbers in the pipeline, do I have enough people to actually deliver on this work? Because the classic thing is to sell a whole bunch of work and not be able to do it. That's really problematic. We see businesses that went into this, talk about cash flow crunch, then you get the delivery crunch, right, where you're really trying to deliver on that business. And it becomes challenging. When you look at people, with the economy being uncertain, hard to hire full-time. Fortunately now, though, things have changed quite a bit, where now you can actually get, people at a fractional level. There's, people that want to do things as side hustles. The old day of having to hire somebody full-time has changed significantly. People in this room could potentially work with your business on a fractional basis and potentially help you or cover off certain gaps where you only pay for what you need. And really, when your resources are finite, you really got to find ways to stretch your dollars. And then you may have maybe there's new real estate costs in your business. Maybe you need to maybe you need to have an office, you need to have a facility, you need to have different things to be able to bring clients in. Sometimes you just need an office just to look bigger, to attract bigger clients. There's different ways you can think about it that way. Investments in machinery and equipment, depending on the type of business you're in. Is your equipment required, needs to be replaced, or new machinery, or delivering new product lines? These are costs that are going to come into your, oh, what did I just do? Oh, there we go. Speaking of machinery and equipment, anyway. And then of course, we talked about the different costs earlier, right? Making sure you've set aside money for marketing, different expenses and taxes is important. And then finally, the big one, which we spend a lot of time with our clients on, is making sure you're paying yourself, and in the most tax efficient way possible, right? So everybody's got to pay tax, pay only the legally required amount, don't pay a penny more. Let's find a way to optimize that, to put more money in your pocket and less in the government's hands, so that you can grow and build your business. So then the last kind of piece of the framework is funding, right? So you did your pipeline, you did your costs. How do you fund your business? So the two big angles here are debt, which of course could be bank loans, credit lines, all that stuff, and then equity. This is money you're putting in yourself, or investors that are coming in on your deals. And you might say that's where all your funding comes from. But another piece of funding that people overlook, and it's actually, I would say, of all the things when I deal with so many entrepreneurs, the most misunderstood thing is this next topic. I got some suspense hopefully in that. Is about working capital, right? It's your short-term funding needs, right? You think about your debt and your equity, but what's happening with short-term, day-to-day, to help you keep things moving? The first one is really about money owed. This is money owed to you, right? And this, you might have seen these dollars before from before. Money owed minus money owing is your working capital at a high level. So someone might say, well, what do you mean by that? At a given point in time, let's just take, at the end of December, a bunch of customers owed you some money. That's your money owed. It's sitting, waiting to be collected. Somebody's got to cut you a check. The money's not in your physical bank account yet. You're hoping to get that. Maybe they're going to pay you January 15th. Maybe they're going to pay you hopefully soon. That's money owed to you. And then money owing at the end of the month, you might have, for example, maybe you have to pay your suppliers, your vendors. All that money is sitting out owing. If you take the difference between those two, you may either have money that is coming into you, or you have money going the other way, depending on how your business is structured, how your payment terms are. So money owed, again, customer unpaid invoices, so these haven't paid you yet. That's money that they owe you. Tax refunds that are coming in, hopefully from HST and things like that you're claiming. Deposits, so money that you may have out there, and then money owing. So suppliers, vendors, people that owe you money, tax payments that you've got to make. So of course you've got to set money aside for all that. And then of course customers sometimes will prepay a retainer or will give you a deposit when they sign the deal. But you haven't done the work yet, so you owe them a whole bunch of work. And so when you think about your overall funding, a couple of big tips here. So first of all, think about any debt that you have, and personal or corporate, I would say. Thinking about, am I ready to deal with that side of it? Secondly, thinking about your cash crunch. Are you in a crunch at the end of the year? Where is this money going to come from? Do you have money on your line of credit or things like that to fund that? Do you need to get money from investors? And then, are your customers paying on time? These are really important things to think about. And then, are you paying, this is a classic thing I see as well, we pay our suppliers too fast, right? If the invoice says 15 days, pay them on the 14th or 15th day. Don't pay earlier. Use that to be able to fund your business. So with that framework in mind, what's next? Where do you take this from here? I would recommend, first of all, taking some of the principles from this. We'll make the deck available to you. Build your financial plan for the year. Think about your pipeline, your costs, and your funding, and how that all lines up. And then run those scenarios. What happens if everything goes as expected? Or what happens if things really break the right way? I'm actually able to double my sales, or really stretch what I'm going to do. And then, don't just do it now and then never look at it for the next 11 months. Every month, take a look at it and see, am I tracking? Am I going to make those numbers this year? How am I looking? And then we, as a gentleman here also said, monitor that sales. Like, get on your sales. That's what's going to really help you drive your business forward. And then don't forget to celebrate wins, right? Entrepreneurship is a long road. There's ups and downs. It's quite a cyclical cycle. Make sure you celebrate those wins. Take your significant other out for dinner, and then also when the bosses are there, take them with stride and learn from them. And last minute, just share a little bit about what we do as a business. Hopefully this was helpful for you. So our mission at Finalyze is to help businesses grow with confidence. A lot of entrepreneurs we see, one of the challenges in to be able to grow their business is being able to understand their numbers and financially be able to plan for that future. So we really provide that, give you that confidence when you move forward with your business. Whether you're small or mid-market, we help you grow your business. And then finally, I've got a lot of expertise myself in real estate and construction, so we have a lot of clients kind of in that space. We provide accounting, tax, what we call a virtual CFO service. So this kind of financial advice or counseling to help you build your business is a service that we offer. You can swipe this QR code to book a call with me or visit our booth when you get a chance. And I appreciate everybody's time today. It was a pleasure having you guys today.